What is going on, everybody? Today I'm going to be going over a trade recap that I took this week on Tesla. I took this on Tuesday, February 14. This was the day that CPI came out, the morning of. We got a 34.80% return, netted $284. So let's not waste too much time. Let's get right into it. So this was CPI day, one and done banger. Tesla recap. Let's go into the chart real quick. So February 14 was this day right here. So CPI came out hotter than expected, and I wanted to see where to take a trade. On days like this, I like to be a little bit more patient off the open. So let's start with the 15 minute. I wait for the first 15-minute close, and we see a strong candle right here. What gave me more confidence to take this trade to the long side was I wrote here on my Twitter, few things went into the thought process. So I waited 15 minutes off the open and I saw that Nvidia and AMD had huge relative strength and they took off strong. They just ripped off open. I didn't even get a chance to enter. When the chips run, usually when Nvidia or AMD run up like this, Tesla usually follows right after. That's something that I noticed. It doesn't happen all the time, but it happens usually. So I use that as one of my confluence points for the morning trade. And in addition to that, SPY had a huge wick down off the open on that first 15-minute candle. You can see that right here. That could have trapped a lot of shorts, and this gave us the fuel to move higher up afterwards. I had a game plan on majority of the stocks that I was watching, but of course that kind of changes when CPI data comes out and you want to readjust. But from the past, I noticed that Tesla was consolidating against this 200 supply area for 3 days straight. And when a stock consolidates against resistance like this, it usually hints at bullish action, right? So right here we see this is the 200 supply, and 1, 2, 3, 4 days where we were consolidating against this. Well, more three because we rejected off here, but for 3 days straight we consolidated here, and then we had that breakout afterwards, right? And then at that 214 supply we rejected, came back down, and then 2 days straight we consolidated here against this level, and we didn't have any real continuation to the downside, any rejection off this 200 supply. So that's what I was watching, and I knew that today would be a day where we would get a certain move, either whether it be to the downside off this supply or we break this supply to the upside after this consolidation. So here we see that I took my first entry on the 80 EMA retest with a super tight risk, and these contracts ran 50%, but of course I netted 34% because I scaled out on the way. Let's see what I got right here. So I used the 8 and the 5 EMA to look at trend on the intraday on the 15 minute. So as I told you guys, I saw Nvidia AMD had relative strength, SPY had that huge wick down, and Tesla made this candle right here, right? This huge candle. We broke this downtrend, short-term downtrend on the EMAs. We crossed above, and I took this entry right here as it came down and retested that 8 EMA level. And after I took this ad on this retest, let's actually go see what I did minute by minute on TradeZella. So this is the trade right here. So obviously this is a supply turn demand. We're watching for this supply to turn into demand as we break out of it. And let's look at my ads at about 9:47. So which is 2 minutes after this candle closed, we got that retest. 9:49. I took ads. I took about 2/3 of my position right here at 136, and then at 9:49, I guess we did come back to that level because I took two more. I took the rest of my size, 1/3 left that I had to add on. I took that at the same average at 136, and at 9:56, 9:56, 9:58, I scaled out. 164 would have been a 20% scale. 180 would have been a 32% scale, and 2.06 would have been a 51% scale. So I got a 20, 32, 50% scale about. All right, let's go into the 5 minute to look at this more clearly. So these three candles, this makes up the first 15-minute candle. And right here, I added at the lows of these two candles, right? 950. I added at 949, 947. So I would have added all my position on this candle. And then at about 956, I started to scale out, which was right here at right after the close of this candle. So it would have been during this candle, 956, so 958. Yeah. So I scaled out majority of my position within this candle. Of course, we moved up pretty high. These contracts went to a high of about, let's see. Yeah, wow. These contracts went to a high of 250. So, if you do the calculations, I'll do it right here real quick, 1.36. These contracts went up 84% from my entry to a high of 250. That's 83% from my entry. So this was a solid trade. You could see right here after entry, I was only red for about like 6 minutes, and then we had that huge move up. My profit target was 2 on the contracts. My stop loss was 1.18. I risked about $108 to make 384, but in this case, obviously, we made 284 because I scaled out on the way. I didn't take off my whole position at 2 and wait till we got there. So this was an A plus setup, 5 stars, supply turn demand. But now let's get into more of the technicals that went into this trade. So I use supply and demand because it's very consistent, it's very structured. It allows me to make less decisions. It allows me to, move quickly during the trading hours. So how do I use these, right? I made a thread on this previously. You can check on my Twitter, but to do a quick recap, if you mark these zones, you see that price moves up to certain levels and then quickly reverses. Right here, you see this? It moved up to this area, quickly reversed. It moved back up to this area, quickly reversed. What does this mean? There are sellers in this area. We sold off here on February 2nd, sold off pretty hard. Next day, we went back to that level, right? Ask yourself, are there still sellers there? So we came back down. It wasn't as big of a move as it was the day before. So there was still some sellers there, but this zone is getting weaker, right? This zone is getting weaker as a supply zone. And then the next 2 days, we consolidate at this area. What happens when we consolidate our resistance at supply? It's indicating bullish movement. And what happens the next day? We break out of this supply and we move up. And then within the next 2 days, we come to this new supply area, which was the 214 supply. And then after that, we sold off hard and came back down to this next zone, right? You see how we move from zone to zone like magnets? And here we come and we consolidate again for 2 days, right? We're not really getting any movement to the downside. We did get a movement to the downside here, but we trapped up with a huge wick down on the hourly. And then the next day where I took the trade, we broke out again. So this supply turned into demand, right? This area would have been red before when it was supply, but as it got weaker and weaker, this area turned into demand and buyers stepped up in here. And then we moved back. Look where we moved back up to. We moved back up to this previous supply, right? Right here we took a pause. Of course, we went a little higher, but these zones aren't supposed to be 100% accurate, but they're supposed to give you an idea of where to become interested. I don't take a trade just because it's in that zone. I look at the zone and if the price is in that zone, I'm interested. So how did I use that for the day I took this trade? Right here, I took this trade, right? Look, the price moved into this zone, and as I mentioned before, you remember NVIDIA AMD had relative strength, SPY, huge wick down on CPI day, and I was looking at a bullish setup, right? And I knew that this was consolidating at resistance, which was bullish, and then we moved into this demands into this supply zone, right? Previous supply, we moved into this zone, and now I'm interested in this trade on this stock. The zone gave me interest to become interested in taking a trade on this stock in this area, right? This zone gave me interest to become alert. When I see this, I'm like, hey, something might be happening here. Supply and demand is the foundation, but you need other confluence points with it to make it a higher probability. So what was my confluence points? I looked at relative strength, right? This was relatively strong. It was consolidating at resistance, which was bullish. I was looking at higher time frames. AMD Nvidia ripped off open. SPY had a huge wick down. I was looking at overall market and other stocks. to get an idea of a sense to where to trade this stock in which direction, right? So I had relative strength, higher time frame, and then I used the 8 EMA to take an entry, and my stop was either a close below the zone on the 5 or a close below the 15 the 8 EMA on the 15-minute, right? You see how I don't have to really make much decisions. This zone gives me everything that I need to know. It gives me my stop, it gives me my predefined stop, my EMAs give me my predefined stop. My target was 206. We didn't get all the way there, and yeah, I did scale out, which which was fine because we got a pretty good move on the contracts, which is all I'm looking for. I'm not looking for those 100% moves of the time. Consistent base hits will suffice. Small gains add up over time. But yeah, this was a quick trade recap. Hope you guys liked the technical analysis on supply and demand, confluence points I use, and what I looked for overall. And hopefully, you guys took away some value, learned something new, and I'll catch you guys next time.